Alec Walker, EVP of Crestmont Private Wealth, here to provide you with a mid-year market update as we approach the end of Q2. I'll also touch on the latest news regarding inflation and interest rate cuts, and then we'll talk about one of the more highly discussed stocks and its impact on the overall market performance. So as you may know, I was out for the month of May, and based on market performance, I should take off a month more frequently. In May, the S&P 500 was up 5.1%. Bonds were up 2.2%, international markets were up 5.1%, and even emerging markets were up 2% during May. So overall, a very positive month of May for asset classes. That performance has continued thus far into June. A lot of that being led by the lower inflation numbers. The numbers for June came in lower than economists forecast. This has brought interest rates down. And even though the Fed has elected to hold rates steady during June, all indications are that we should be expecting at least one rate cut in 2024. Overall, that seems to be positive for both the bond and stock markets. Now, shifting a little bit more from the macro to the micro, let's talk about one of the more discussed stocks this year in the market. NVIDIA has contributed to 33% of the S&P 500 returns year to date. We wanted to point this out to investors for a couple reasons. Number one, this is extremely rare. As you can see from the chart on the left, only Apple in 2020 comes close to matching NVIDIA's contribution rate. The chart on the right compares the market cap weighted index versus an equally weighted index. You can see that thus far, the S&P 500 market cap has outperformed the equally weighted by about 10%. Keep in mind that both of these include the other mega cap tech companies that have performed quite well this year. Now, the second thing we wanted to point out is should investors be alarmed by this, by the amount of contribution NVIDIA's had? We don't think so. Since 2000, the equally weighted S&P 500 has actually outperformed the market cap weighted index in 15 of 24 years. So the second question may be, well, why is this happening? Why does NVIDIA and other large tech companies continue to outperform the index? Well, one reason could be the earnings. In 2022, many large tech companies greatly underperformed their earnings forecast, and the stock price followed downward. In 2023, they greatly outperformed their earnings forecast, and the stock price followed it back up. Now, the trend of this continuing, of greatly outperforming your earnings, is unlikely to continue. But that doesn't necessarily mean that the stock index or portfolio performance will suffer because of it. And it definitely does not mean that we should try to time when that underperformance will occur. As it relates to Crestmont client accounts and our investment processes, we have a few thoughts. Number one, most Crestmont clients have benefited from the outperformance of NVIDIA this year. That's because NVIDIA represents the third largest holding, along with Microsoft and Apple, of our core equity strategies. Number two, we believe in the efficiency of indexes. Why? Well, you get to benefit in the outperformance in years like this for companies like NVIDIA, but you also get to participate in the next up-and-coming companies and their growth. Statistically, once a company becomes one of the largest in the S&P 500, it tends to underperform the index over the next decade. Using a sports analogy, that could be like a superstar player who's past their prime and starts to get challenged by those next up-and-coming players or companies. We want to participate in both across multiple market cycles. And then finally, number three, we do offer 3 separate satellite strategies for our clients who want to take on a little bit more risk or a little bit of a different investment profile. Those strategies are our focus portfolio, which consists of 25 companies and is focused on total return. Our equity income strategy, which is 30 companies with a focus on dividends. And then number 3, our U.S. targeted equity strategy, which is a dissection of the U.S. large cap and small cap companies focused on profitability and stability. If you have any questions about reviewing your portfolio, discussing our core and satellite strategies, please reach out to our team via info@crestmontpw.com. Thank you.